So you need new equipment to grow your business. You walk into your bank, you lay out your plan, and then you hear that one word you are absolutely dreading. No. It feels like hitting a brick wall, right? But what if I told you that no isn't the end of the road? Well, in this explainer, we're going to break down exactly what you do next.
So, is that really it? Is the bank's rejection the final word on your business's growth? You know, so many entrepreneurs think it is. But the truth is, the world of business financing in Canada is so much bigger than just those big banks you see on every corner.
And this quote right here, it absolutely nails it. That no isn't a failure. Think of it more as a signpost telling you you've been talking to the wrong people. It's really an invitation to start a totally different and, frankly, a much more productive conversation.
Okay, so to understand your options, you've got to understand the playing field. The best way to think about it is that there are 3 tiers of lending in Canada. Now, most people only ever deal with the first one, but for so many businesses, the real opportunity, well, it's hiding in plain sight in Tier 2.
So Tier 1 lenders, yeah, these are the household names, your RBCs, your TDs, your Scotiabanks. And look, they offer fantastic rates, there's no question, but they can do that because they take almost zero risk. To get those rock-bottom rates, you need what they call a perfect file. We're talking spotless credit, steady T4 income. Basically, you have to fit perfectly inside their very small, very rigid box.
Now, when a Tier 1 lender says no, you enter the world of Tier 2. And it's so important to get this next part. These are not some shady back-alley lenders. We're talking about fully regulated Canadian financial institutions. Think Home Trust or Equitable Bank. They're a massive, vital part of our financial system, and they specialize in helping good businesses that just have a little wrinkle or two on their application.
And here is the absolute key difference. While the big banks are relying on rigid, automated computer algorithms, Tier 2 lenders use what the industry calls common sense underwriting. This means a real person, a human being, is actually looking at your entire file. They're trying to understand the story behind the numbers, which is something a bank's computer system just can't and won't do.
This chart really lays it all out. Tier 1 is hunting for perfection, right? They need that 680-plus credit score and a file that fits their cookie-cutter mold. But Tier 2, it's built for the real world. It's for the self-employed contractor or the business owner who hit a rough patch and has some bruised credit, but still runs a solid, profitable company. They see the business, not just the beacon score.
So if they're not obsessed with your credit score, what do they care about? Well, they care about the actual health and stability of your business. How long have you been up and running? Can you show consistent money coming in? And this is a big one. Is the piece of equipment you want to buy actually going to make you money? That's what a common sense look is all about. This statement right here, it's a total game changer because it just blows up the myth that your credit score is everything. Think about it. If a lender is financing a $40,000 piece of machinery, they care a whole lot more about your proven ability to run a business for 3 years than they do about a late bill from last year. A proven track record is powerful stuff. Okay, so we've got alternative lenders, but there's another massive piece to this whole puzzle that most business owners completely miss, and that's government programs. And no, I'm not just talking about grants.
Let's be super clear about this. Free money, like a true, non-repayable grant to buy a piece of equipment, is incredibly rare in Canada. It's like finding a unicorn. But that's not where the real help is anyway. The government supports businesses in 2 incredibly powerful ways, with loan guarantees that make getting a yes way easier, and with tax incentives that can slash the real cost of your purchase.
The absolute cornerstone of all of this is the Canada Small Business Financing Program, or the CSBFP. Now, this isn't a loan you get directly from the government. You actually still apply right at your regular bank. But here's the magic trick. The federal government steps in and provides a massive guarantee on that loan. It is, without a doubt, the single most important financing tool for small businesses in this country.
And here's why it's so powerful. The government guarantees 85% of the loan. Just think about that from the bank's perspective for a second. All of a sudden, their risk on your loan just plummeted down to only 15% of the total amount. This is exactly why a bank that told you no on a regular loan might turn right around and say yes to a CSBFP loan. It completely changes their calculation.
And hey, don't think these are just small starter loans. For the 2024-25 year, the average loan size under this program was just shy of $300,000. This program is out there, right now, funding major equipment purchases for businesses just like yours every single day.
All right, the second major tool is a tax incentive. Now, I know the name Accelerated Capital Cost Allowance sounds a little complicated, but the idea is simple, and it's a total game changer.
For certain types of new equipment, it basically lets you write off 100% of the cost against your income in the very first year you own it. It's a huge tax break, right when you need it most.
So, what does that actually mean for your wallet? Well, for a typical manufacturing company in Alberta, taking this immediate write-off effectively slashes the after-tax cost of that new machine by about 28%. That's not a loan you have to pay back, it's a real, permanent tax saving that puts cash right back into your company.
So, we've got the alternative lenders, and we've got these powerful government programs. Now, let's pull it all together into a real, actionable playbook. How do you take all this knowledge and actually turn that frustrating no into a yes?
Let's focus on what you can control. First, show them the money. Have 3 to 6 months of bank statements ready that show good, consistent deposits. Second, if you can scrape it together, offer more money down. Third, always pitch the equipment based on how it's going to make you money. And finally, just be straight up about any credit issues. Trust me, these lenders have seen it all before. Honesty builds trust.
This slide is basically your cheat sheet. It gives you a super realistic guide to what you can expect. If your credit is fantastic, yeah, you might get away with 0 to 10% down. But look what happens as the score goes down. Your down payment becomes your superpower. A business owner with a 590 score who can put 25% down is often seen as a stronger bet than someone at 630 who has no skin in the game. Okay, so we've got the playbook, we know what to do, but how do you navigate this brand new world of different lenders and government programs? Well, there's one final piece of the puzzle that ties it all together. It's like a master key that can unlock this entire ecosystem for you.
Just look at the difference here. When you go straight to your bank, you are only seeing their one set of products. If you don't fit, well, that's it, dead end. An equipment finance broker, on the other hand, works for you. They have access to the whole market. Tier 1, Tier 2, you name it. They do all the legwork, and when one lender says no, they don't give up. They just move on to the next best option for your business.
And this, right here, this is the ultimate takeaway from all of this. It's time to stop worrying about what you don't have, like a perfect credit score, and start focusing on your strategy. Real success in financing comes from knowing all the tools that are out there, and then finding the right partner to help you use them.
So the next time you need to finance equipment, just ask yourself this one question. Are you applying to the right lender, or are you just applying to the most familiar one? Because now that you know what's really out there, the equipment you need to grow your business could be just one different conversation away.